Hey guys, what's up? Spen here. So in today's video, I want to cover Airbnb's IPO. But specifically, I want to target the dilution part of it. You see, there's massive dilution that is going to occur in this stock in the future. And this is all laid out in their S1 filing. I did the same thing for Snowflake a while ago. And so I'll briefly touch on that. But yeah, let's dive straight into this and let me show you guys what I'm talking about. So Airbnb is going to IPO at around $60 a share. That gives it a market cap of $41 billion. But keep in mind, if Airbnb reacts similar to how DoorDash or Snowflake did, both of those stock nearly doubled right out of the gate. So you might not get your hands on Airbnb anything less than $100 a share. And that point, it'd be a pretty high valuation and I'd be very hesitant to buy. But towards the end of the video, I'm going to go into my plan, whether I'm buying or not. So make sure you guys stay tuned to that. I'll give my explanation and my thoughts on that. But let's dive straight into the dilution part. So right here, we're looking at the S1 filing. It says shares eligible for future sale. It says upon the completion of this offering, based on the number of shares of our common stock outstanding as of September 30th, 2020, we will have a total of 98 million shares of our Class A common stock. Now, actually, I think this is actually about 113 million I saw in another article. But either way, the outstanding common Class A shares is around 98 to 113 million shares, let's say. And that's important to know so we can understand how much dilution is going to occur. So keep that 100 million in your head. Now here, there is two sides to this. On the left, it says earliest date available for sale in the public market. And then on the right-hand side, it says number of shares of Class A common stock. And that's how many shares are eligible for sale at certain periods. So on the left, it says the first trading day on which our common stock is traded on the NASDAQ. So this means on December 10th, when Airbnb IPOs, immediately insiders are going to be able to sell shares. This is quite unusual. Usually there's a lockup period not allowing this. Like in Snowflake, the earliest lockup period, I believe, is December 16th. So on December 16th, Snowflake could see a massive amount of dilution, and I covered this in a previous video. So if you want to see what I talked about in that video, make sure to check it out. I went in pretty detail on what the dilution could do to that stock, and pay attention to that December 16th date. If you see Snowflake drop massively in its share price anywhere around December 16th, it could be caused by that dilution, and that'll also give us an idea of how the potential share dilution in Airbnb could affect the stock. But anyways, going back to the share dilution, the first day, so December 10th, insiders can sell up to 16.8 million shares. So 16.8 million shares is about 16% of dilution. If you think about it, let's say we have 100 million float, and they dilute it by 16 million shares, that's about 16% dilution. Anywhere between 16 to 15%, it depends exactly how many shares there are, but that's a pretty decent size dilution. I'm not sure if this will affect the share price because this is such a hot IPO, and I think Airbnb could just go dramatically to the upside out of the gate regardless, but it's something to be aware of. And even just today's trading day, so December 9th, before the IPO, I'm filming this, the market really went red towards the end of the day. Basically, like every stock in my watch list went massively red, like Tesla down 8% and stuff. So if that sentiment continues in the market on the first trading day, maybe Airbnb won't experience that dramatic rise like some of these other hot IPOs did. So we'll see how that goes. But anyways, first day, 16% dilution could occur. So moving on to the second column here, it says the second trading day immediately following our public release of earnings for the first quarter following the most recent period for which our financial statements are included in this prospectus, provided that this closing price of our Class A common stock on the NASDAQ is at least 33% greater than the IPO price, then they can dilute shares. So what that means is that after the first quarter and earnings call, if the price of this stock is 33% higher than, say, the $60 IPO price, then they're able to dilute shares. And 33% higher would be about $80 a share. So after the first quarter, if Airbnb is trading above $80 a share, If we move over to the right-hand side of the column now, they're able to dilute up to 27.8 million additional shares. So that would be an additional, approximately, give or take, another 27% dilution on top of the already 16% dilution. So now we're moving in the 40 plus range of dilution in just the first quarter. That is pretty substantial, and that can definitely have a significant impact on the share price. So this is something you guys need to be aware of when you're investing into IPOs. There's a reason why a lot of very famed investors are very hesitant to invest in IPOs. It's because massive dilution often occurs. Usually these IPOs are very overpriced. Like, keep in mind, Airbnb is being valued at $41 billion, where just 6 months ago, a private equity firm valued them at $18 billion. So they're already being valued very high. But this might not matter. This is a very hot stock that a lot of people are going to be buying regardless, but you gotta know the risk. So anyways, let's move on to the last column. So the later the opening of trading on the second trading day immediately following our public release of earnings for the second quarter, the most recent period of which our financial statements are included in this prospectus, the 121st day after the date of this prospectus. Okay, so this is confusing to understand. Basically, what they're saying is that after the second quarter, or 121 days after the original prospectus, they're able to dilute shares again. And if we move over to the right-hand side, it says all remaining shares held by our stockholders not previously eligible for sale, subject to volume limitations, are now able to basically sell their shares. So the remaining of the shares are now able to be sold after the second quarter. And this is a pretty fast lockup period. These insiders are able to sell their shares very quickly. Usually this is over a year or two, the lockup periods work. So yeah, keep that in mind. This is a very fast lockup period. And so the total amount of dilution that is able to occur after just 2 quarters, it says here, we and all our directors, executive officers, and certain other record holders that together represent approximately 79% of all outstanding Class A common stock. So nearly 80% dilution can occur after 2 full quarters. That is a lot of dilution, but this isn't something strange for an IPO. This is how IPOs work. A lot of dilution always occurs. Just in Airbnb's case, this is very fast lockup periods, and it's all basically out of the way in just 2 quarters time. So I could definitely see this having a pretty negative impact on the stock. So would I buy Airbnb on the IPO knowing all this share dilution is going to occur? Well, before I explain that to you guys, let me play you a clip of Jim Cramer talking about Airbnb, because I feel like he sums up my thoughts pretty well. And then after the clip, I will explain to you guys what I'm going to do.
With COVID cases exploding right now, Airbnb is going to have a real ugly fourth quarter, and that weakness could very well extend into the first quarter of next year. But think about this. By the time April rolls around, millions of people should be vaccinated. Remember, I'm calling it the vaccine glut. And I have to believe we'll see recovery in the travel stocks in a rapid fashion. Plus, once we get to March, Airbnb is going to be up against some incredibly easy comparisons. They sets the company up for some monster year-over-year growth. In other words, this business will look great in 2021, especially when you layer in all the cost cuts they put through. On top of that, Airbnb's a last man standing situation. Sadly, a bunch of smaller bed and breakfasts are going under, which means less competition. But the next few months could be pretty rough, especially if IPO investors freak out when they see Airbnb's first quarter out the gate. They shouldn't. They should know that. They should be listening. Meanwhile, they've got some real competition. There's Vrbo, Expedia's vacation rental subsidiary, and there are at least a half dozen smaller players in the same space. Still, I think Airbnb, I'm telling you, I think I'd buy it. Yes, right price, but I would buy it. The stock's expected to come public between 56 and 60. Got to figure it'll be at closer to the higher end of the range or even above it. At the high end, this company would have a $42 billion market cap, not down with 17 where it was. But, you know, listen, this is a big company, and it's a good one. At 60, Airbnb will be trading at a little less than 10 times next year's sales, at least according to estimates from an outfit called Atlantic Equities. If the stock gets up to 80, that's more than 13 times sales. That's too expensive for me. That's more than twice as expensive as something like Lyft or Uber. So where do I come down? The bottom line is that I want you to own Airbnb because it's set to have a terrific year starting next March. That means you've got a few months to make your move. No rush. If you can get the stock for $68 or less this week, I'd back up the truck. If you can get it for less than $85, I'm granting you a small position. Any higher, though, and I'm going to have to say you got to keep your bat on your shoulder and wait for a better pitch.
Okay, guys, so for the most part, I agree with Jim Cramer. I think that Airbnb is a buy right out of the IPO. Of course, that's if you can get it for the right price. So my plan is to put a limit order of $70 a share in right off the gate. But I'm not going to put the full amount I want to invest in this company right away. For example, say I want to put $10,000 in total into the stock. What I would do is put $5,000 in right away with that limit order of $70 a share. If I get it, great. If the stock continues to go up and never trades below 70 again, I'm fine with that. I will just leave that $5,000 in and I won't throw any more money into Airbnb. However, let's say, for example, Airbnb dips down all the way down to $40 a share. Well, now I have that $5,000 to dollar cost average into Airbnb, which would lower my average price. So that is really my plan and what I will be doing on the IPO date when you guys are probably watching this video. So anyways, guys, I hope you appreciate this video. I hope you learned something new with the dilution. It's something that's just good to keep in mind. And make sure to comment down below. Let me know if you guys are buying Airbnb. I'm really curious to know what most people's sentiment is on this stock. And yeah, make sure you guys subscribe to this channel, drop it a big thumbs up, really helps out. And as always, check out the links down below in the description. I have a Webull link where if you use it and deposit just $100, you'll get 4 free stocks. And with all that being said, I'll see you guys on the next video. Thanks for watching till the end. Really appreciate that.